Hey guys, I am Wing Hon here, your host for tonight. Welcome to the show. Tonight is a very interesting show. Because all the while, my life is talking about Shopee and also e-commerce with teacher Jamie and also Dylan. But today's topic, we are going to talk about stock investment. Okay. So and what is much more interesting is that I get to invite Peter, also known as Mr. Money, to the show. Let us welcome Peter, or shall we call you Mr. Money?
All right. Hello, everyone. Hi, Wing Hong. Thank you very much for inviting me here tonight. And for all of you guys who are watching, and you can call me Mr. Money, or if you want, you can also call me Peter. Yeah. So I run this YouTube channel called Mr. Money TV, where I teach people about personal finance.
Yeah, and this how I know Mr. Money as well, because during COVID, you see, everyone is talking about shares, what sort of shares buy and this and that. And I also lost my job. I need to make some money also. So I search on Google, search online lah. I search on a lot of so-called gurus, that shares about stock investment and all sort of things now. And then that's how I came across with Mr. Money. Yeah, and then you, because the thing that you teach is very easy to understand, straight to the point. Yeah,
Thank
and it's
you very
very
much.
very educational. Yeah, for me that I don't know anything, it's very easy to understand. So for those that are interested in like stock investment, you can definitely check out Mr. Money YouTube channel. Yeah.
Thank you
So
very much, Wing Hong, for joining us in the channel always, and learning from there. I think it's really great, to have someone with who's considered a big YouTuber in Malaysia, with 100 over 1,000 subscribers. Yeah, watching
thank you.
my channel. Yeah, that is a humbling experience. Thank you very much.
No worries at all. Same goes to you. Just cari makan lah, you see.
Yeah, lah,
Yeah,
all cari makan.
I'm actually very interested to know. Those that are watching now, how many of you guys are actually investing in stock? Yeah, because nowadays, I think because of the pandemic, when we scroll over on our FB, there are tons of new gurus coming out, to share, to set a course, pretty much, you also don't know, like, is this guy, legit ke tidak, a lot. Yeah, when you scroll on FB. So, yeah, I think it's good to have you today to come on board. If you have any question, you can definitely ask Peter, also known as Mr. Money. And I also have some questions. I have really some questions for you as well. Hi,
All
EG
right.
Tan. How are you? Stock, also you are investing in stock as well.
What, EG is here? Hello, EG.
How are you? Is it your fans or what?
Yeah, he also joins my live very often.
Oh.
Yeah, so it looks like we are common viewers. Yeah.
Hi, EG. Yeah, because I do not know much about you as well, and I appreciate that my audience also do not know much about you. Do you mind to like share with us some of your backgrounds, and then how do why do you set up Mr. Money channel, and what is your goal or purpose of this channel as well?
All right. So just to share with you guys a little bit about my background, I hope it doesn't bore you guys. Anyway, I'm actually currently 33 years old. I started off in the financial industry when I first graduated. So I graduated as a business major degree in psychology and business. It's a double major. So I went and did management training, but I didn't like it. So after a while, I just came out and then I became an insurance agent. Yeah, I joined the insurance industry. Then that was something that I was pretty good at doing. I think ever since I was young, everyone told me that I'm very good at talking. So I decided, like, look, better make money with your mouth, lah. If you're not so good in anything, right? I wanted to be a strategy consultant, go Accenture, those kind of stuff. But I'm just not good enough, lah. So since the only thing that I know how to do is talk, then they say you better make money with your mouth, right? So I thought, okay, lah, go and do sales, but can make some money. And the moment the opportunity present itself was insurance, because also at the point I got sick. I went to a hospital, classic story, and I realized that, hey, crap, I got no insurance. Then I thought, you know what? I think this one can sell, especially as long as got people will be sick. Sure can sell. So so I became agent. That was what I did, and I joined the industry for about 10 years. Year in, year out, I hit my target. You know how normal agent is, right? After they hit their target every year, then they will start driving BM, live nicer, very
Yes.
good gaya. And then they always tell people like, oh, this is financial freedom, you must join me because this is the best industry. So I did that as well, right? I have people under me. I became a manager after a while. And I was considered doing very well in, not super, but very well, yeah, in that industry. But about 3 years back, suddenly, it just hit me that, like, firstly, I think the market is changing. I suddenly, there was this feeling when I look at all the banks and everything, and I just thought, hey, what if the banks replace us? What if agents, insurance companies say we don't need agents anymore? And it just reminded me during my uni days, we used to go shopping, right? And then there was e-commerce that came about, Shopee and those things. And I was one of the first adopters. I started buying things online in the year of 2006 and 7 itself. And everyone used to tell me, like, hey, you're not scared, you cannot corner like that. Yeah. And I still go and buy it. And after a few years later, buying things online became such a normal thing. Today, in fact, it's even your grandmother will buy things online. True or not? So, and I just thought to myself, like, hey, what if agents face the same issue? And then I read a lot of communications from Bank Negara. I see the direction of where are insurance companies starting to invest their money, and I noticed they're investing in a lot of infrastructures that can replace an agent. For example, AIs, or for example, chatbots. They make it easier to communicate and so on. And so I thought to myself, if I'm gonna continue doing this, how long can I do? 10 years, 5 years, 20 years? Yeah. And I'm 30 years old at the point, and I thought to myself, like, if that comes, I'm 40, and if 40 I want to change job, I think it's not a good story lah. So might as well I tried to do something now. And that moment, I thought a lot of different ideas. I wanted to go into to advisory and become an independent financial advisor. And I realized that if you want to charge people advice, you charge people about 500 ringgit a year, up to about 10,000 ringgit a year. Yeah. And I mean, no one want, if I'm gonna be an advisor, I don't want to charge people 500 ringgit a year lah. That's that's the cheapest advisor be lah. Yeah. And I know that there are not many people who can pay 10,000. Yeah. And I just felt like, hey, actually, when I joined this industry, I wanted to help more people to understand finance. I felt that, like, when people understand how financial works, then you are being put in a level ground. Because I'm not from a rich family, but the reason that I did well is because I understood how money works. Yeah, and I was willing to I was willing to work hard for it once I understood it. Then I just thought to myself, like, look, you don't know how to do anything. You only know how to talk again. Yeah, probably the best way is actually to use technology, and the closest to it is put up a content on YouTube lah, and see if anyone want to listen to you first. Because I was thinking, like, hey, maybe I want to build a education platform, that kind of thing. I want to build an online tech advisory that can charge people maybe just 20 to 30 ringgit per hour, or maybe like 1 year engagement, 200 ringgit, that kind of thing. Because got tech ma, then can scale ma. Same thing with e-commerce, right? That's what I thought. But I don't know how to build all this, but I know how to talk. So I thought to myself, you know what, just put up a video and see lah. So that's how I started Mr. Money TV. Yeah.
And I heard that this is your full-time job, right? To create contents on YouTube and also your own platform.
Yes. Actually, this is currently my full-time job. Although I still have quite a good amount of income coming from the insurance side at this point, but it is declining. It is dropping. Yeah. In a way, being an insurance agent last time was a good thing, because it built a certain amount of income that, in a way, in these last 2-3 years, I was kind of like financially free lah. I was like financial freedom lah, allow me to pursue this career as my full-time job. Yeah.
So Jeffrey Son, is he your friend as well?
Oh
Jefferson
yeah,
Chong.
yeah.
You are
Jefferson is
30.
also one of my viewers. Yeah, I'm
Yeah,
33. Yeah.
you are 33. You are same age as me. 87.
Oh yeah. High five, man. Give you a high
87.
five. High
Which
five.
yeah, high five.
Yeah.
which which month? Which month?
I'm January 7.
Oh, I'm fat.
Yeah, February. Wow, just 1 month after me. Yeah, you know what they say, right? People
Huh?
who are nearer to January, nearer to February, they are usually more grounded, more 稳重 ah. I don't know if you understand Mandarin.
Oh.
Yeah. So like
Mm,
usually very steady people. I got many good friends of February people lah. not that I'm a feng shui fellow or what lah. Just simply say it.
oh, it's good to know. So I mean, for those beginners like like myself and also some of the audience that watching this live, I'm pretty sure that a lot of them they do not know how actually like stock investing or stock investment works. Can you like just briefly go through like how actually like stock actually works?
Okay, I think for people who are here, if let's say you haven't invested in stock before and you do not really understand how it works, maybe you guys can just write down there in the comment and say like beginner, so at least Wincon would know that you're new in this, and I also would be able to see from some of the chat groups here. Now, to share with you guys about stock investment is the whole idea about stock is this. Stock is actually business. Okay. Now, how it works is when a business is put up on Bursa Malaysia, then if you want to own the business, you buy their shares. And this is what we call stock. When you buy, like, let's say, for example, Nestle on Bursa Malaysia, you automatically become one of the owners of Nestle. However, naturally, one share probably like 100 over ringgit per share, and when you buy that you're like a 0.00 something percent ownership of Nestle lah. So basically, if you want to own a business, you buy shares. Now today, if you start a nasi lemak stall, you own 100% of your company share. And then later when you open a shop, then maybe you needed a partner, and then you say, hey, let us go 50-50 lah. So what happens is that when you go and open the company, then you also need to decide the number of shares. And for those who open a Sendirian Berhad before, you actually know you need to decide the number of shares and how many shares to give to your partner. Now, the only difference with a stock that you are investing on the public, the Bursa Malaysia, is that anyone can buy. So that's why it's called public company. Now, Sendirian Berhad is private limited. So Sendirian Berhad means you cannot simply buy into that company. You need a private invitation. So for example, today I have my Sendirian Berhad. If today you all want to invest in this, you can't invest in it just like that. There's no channel for you to invest. The only way is you give me a call and say, hey, Mr. Money, Peter, I would like to invest in your company. How does it go? What are you going to offer me? Then I can name whatever price I like. I can tell you 1 million for 10% also can. I want to tell you like 50 for 1 million also can. Yeah, so that's for private. But for public, which is the ones that you are investing, which is stocks, yeah, that one is actually on Bursa Malaysia, and the price are quoted there already, are quoted on the board itself. That's why you keep seeing the number keep changing. Per share 3 ringgit, and then next few minutes per share 3 ringgit and 20 cents, like that. It keeps going up and down. And why it goes up and down is because supply and demand. When today you offer your shares of your company to everyone to see, right? Then naturally people can bid law. For example, today if for those of you who are watching this channel, you're very used to e-commerce, right? Yeah. Then you will actually understand like there's bidding. Let's say, for example, Weng Hon wants to sell his water bottle. He want to put up this water bottle right now. And then he just put it up there and then he say, I think my water bottle is worth 3 ringgit lah. And then he just put it up there and then you guys bid lah. So someone will say like, I think not bad, look quite good, 3 ringgit and 10 cents. and then the other person will come up and then say, 3 ringgit and 10 cent not bad I think 3 ringgit and 20 cent I want and then suddenly you see like a lot of people buying at 3 ringgit and 20 cent you scared sell finish already. So what you do, you go and offer 3 ringgit and 30 cent. Then later, right, I feel like, actually I don't know what I buy this for. Since now the price go up to 3 ringgit and 30 cent already, right? I think I want to sell and make 20 cent profit because just now I bought it at 3 ringgit So now I got 10 bottle. I straight away one shot sell at 3 ringgit and 30 cent. Then everyone like, wow, why suddenly so many people sell at 3 ringgit and 30 cents? So they are willing to, they also thought to themselves like, maybe Wing Hon will tutup kedai already. I think I also better sell mine. So since you want to sell it fast, then you offer at 320. And then the other person, wow, and selling more. Then I think I want to get out also. So now I sell 3 ringgit only. And this is how the price fluctuation go. It is actually, in summary, to put it, how stock market works is, number one, you are actually buying a company. You're not buying just a piece of paper. You're not buying into nothing. You're buying the ownership of a company. This is the first thing. Second, how the price actually works is very simple: supply and demand. It's a very simple idea of what people are offering and what people are willing to buy it for. Market price. That's all. Yeah. So I hope that answers it and not too complicated.
Yeah, I mean, it's very easy to answer. I mean, to understand. As on like for Shopee ads, we also have this system where we bid for a certain keywords. So when a lot of people buying the keywords, then the price will go very high.
That's right.
Yeah, and if the demand, so I think it's pretty similar. But of course, stock is much more they call it much more things to learn. It's not like just look at the surface of the numbers going up and down. Yeah, and this also will lead to the next question I want to ask also. What are some of the risks of like investing in stock? Because I three weeks back when I was going out, I met the Grab driver. He is 67 years old. And he got his first 1 million when he was age 34. And then at the age of 36, he lost everything because of stock. I think the time because of the 97 kind of things. Yes, he lost everything, his company, his houses, his properties, and also his wife and also his children. Is a very, very sad moment. And now he's just very chill. And then, I mean, that is the thing. What you will lose everything. I mean, that's what we always hear lah. While you play stock, nanti rugi lah, this lah, there you go bankrupt a lot of this kind of negative feedback that I heard from investing in stock. So what are the risks of investment, or what are the advice that you give?
Yeah. So let me just share a little bit about my experience with the stock market itself and how I actually came to learn a little bit more about it, and in terms of my understanding of the risks. So when I was young, I still remember very clearly one incident was during the year of 1997. Just about 1996, my dad saw many of his friends make a lot of money from the stock market. And during that time, my family was actually pretty poor, right? All we had was my mom had one more extra house that she rents out to people. So he was trying to convince my mother to mortgage the house, refinance it, so that they can have money to continue investing, to actually invest in the stock market itself, right? And my mom actually naturally said no. She refused to do that. And 1997, when the market crashed, she always tell us this one thing. I was smart. I didn't let daddy mortgage the house. I was smart, Because now you see all his friends, jalak, mati, some of his friends like wanted suicide, all these kind of classic cases that happen. And so since I was young, my mother always say, investing in stock is a very dangerous thing. Investing in stock is a very, very dangerous thing. And And then that was how I felt as well. And I always, when I was younger, I always feel that like, hey, money is the root of all evil. You know, you always feel that, hey, you know, life is simple without money. You know, why want to be like that? You know, money are not good. I always think like that one when I was younger. But when I went to uni, I did business. And let me tell you very honestly, actually, I didn't choose business purposely. I actually, my course was called Human Development and Management. And that management word I thought was managing humans. So I didn't know it's actually business management. So when I went in, already, because I went to local university, you know how we just take Form 6 and then just masuk saja lah. Whatever government give you, masuk saja. You got no complaint one. So boleh masuk sudah bagus kan. So I masuk already. Then I was like, oh crap, you know, it's business. But okay lah, I have to do lah. So did all. Then I liked it. I started to get to understand more about money, how it works, finances, and so on. Then I was like, hey, actually, money is not as what I thought. Business is actually quite fun. And my father failed in his business. He went bankrupt. That's why I always also have this idea that, hey, you know, I don't want to do business. I don't really like it. Now, then when I graduated, I asked myself this question. I said, hey, you know, now that you have learned all this, you know, like how all this works. So what's the next step in life? I know that my dad didn't go bankrupt because business is a bad thing or evil thing. Okay. I know that stock market is not really like a bad thing, but I don't really know how to define it at the point. But I know one thing is that if you know how to manage money well, you understand money well, then you can make a lot of money. But first you need to understand it. So at the point I went out with my friend, my high school friend. I still remember, he just came back from overseas and he became an investment banker. So naturally, first one I asked him, I said, hey, what you do? I said, oh, now I'm investment banker, I deal with stocks. Then I was like, wow, stocks are very dangerous. That was the first thing I tell him. And I still remember at the mamak store, the first thing that he told me was this, huh? Dangerous? You okay or not? You got study? We are very good friends. He said, buying stock is just buying a company. If you say stock is dangerous, then all the business are gambling also. Makes sense. Makes sense. So then that moment, it made me realize, okay, now, so let's talk about the risk. If let's say stock is not gambling, investing in stock is not gambling, then what are the risks? Why is it so dangerous? The danger comes here. Let us just take one step back. If tomorrow your friend tell you, hey, Weng Hon, I tell you, I got a very good business idea, You know what people say? Now, you open fishing pond. Very good. A lot of people come and fish. Fish for prawn, fish for fish. And there's uncle willing to pay money, and then you sell some beer, you make money, So what are you going to do? He said 50,000. That's all you need. 50,000. Weng Hon, tomorrow give me 50,000. Are you going to put 50,000 with your friend? So
No, of course.
No, right? Why?
Because I don't know how to run a business. I mean I do not know the business. I mean for me lah.
Right.
Yeah, I
So
don't know the business.
that's a very good choice. You see, you don't understand how the business works, and you don't know what is it. You only know that he said that he's gonna make money. If you put your money in straight away, that's the risk. You see, that's the number one risk. So the first risk, just the same as stock. Stock is simply you are investing in a business. The only difference is people are not gonna come to you and say, hey, do you want to buy this business? You see, it is listed there, put up there on the stock market. You have an app or whatnot, web, whatever that you're using. You just see so many names there, Genting lah, Nestle lah, Top Glove lah, all this. And then you decide whether do you want to be an owner of the company based on whatever price that's listed. Now, so with that in mind, right, that's the first risk. If you don't know about the company, you go and invest. That's the first risk. And what risk is it? The risk is actually not the stock is risky. The risk is you're not making a smart decision. You are just gambling. Oh, bagus lah, masuk lah. So that's your risk. It's not really the stock risk. That's number one, right? Now, the second risk is not your risk. Let's talk about the stock, the stock itself. Okay. Let's say tomorrow, okay, let's reduce a bit. Weng Hon, you do e-commerce, right? Let's say, right, today a new guy want to start his e-commerce store. Is it guaranteed that he can make money?
No,
No guarantee, right? Yeah.
no.
If he worked very hard, but he chose a product that really no one will buy one, will he make money?
Won't. Yeah, supply and
Very
demand.
hard,
Yeah.
right? Very hard, right? Yeah. And so there are a lot of factors. Even if he found a very good product, but he doesn't know how to manage his e-commerce store well, right? He will still lose money, right? True or not? So there is that part. Just as every business is, stock can lose money because when the business is not run well, then it lose money. As simple as that. Now, the difference between stock and if you run an e-commerce, or maybe let's not say e-commerce, or you sell a nasi lemak, you go and buy a small table, you go and put outside our office and sell nasi lemak. The difference is this. Let's say today you already spend 1,000 ringgit, buy whatever it needs, you go and open a store, sit down there, sell nasi lemak. It doesn't work. You already put in 1,000 ringgit. That's all. That's all, right? Now, stock is more exciting. Because imagine this, today after you buy a table that sells nasi lemak, right? The table has the word 500 ringgit there because you spend 500. Tomorrow you don't sell any nasi lemak, right? The table suddenly the price will drop 480. Then tomorrow go again 470. Tomorrow go again become 400. So it's very exciting because you can see the price keep going down. It's like seeing a bank account go down. It's very very kanchong. And the same thing when you invest in stock, you see the number go down when the business is not doing well. Then it feels more the feeling is compounded because you can see it directly. You can see it directly. Definitely, there are two reasons. Sometimes it's not because the company not doing well. Sometimes it's just because people are selling more, so people are scared, right? So you need to be able to differentiate whether is it really business not doing well or is it just people are scared they are simply selling. And I always like to tell people this because people always say this one thing. They say stock is more risky than property. Stock is a lot more risky than property, right? I mean, all of us Asians, what are the first investment that you would love to have? Property,
House.
house,
Yeah.
all right, house, yeah. Have you bought a house yourself, Weng Ang? You
Haven't.
haven't bought a house, right? Yeah. Have any of your friends bought a house?
Yes, a lot of them.
Definitely,
Yeah,
right?
most
Yeah.
of them.
Almost all of them, right? Now, think about this, we always think that property is a lot safer. When you buy Hatana, it's very safe. We think of it this way. But the truth is, right? Let's say you bought a house at 500,000 ringgit 3 years ago. Do you think today you can sell the house at 500,000? Not so easy, because today the property price already dropped. But why you don't feel it that way, leh? Number one, you see the house. You know the house is there. You can feel it, can touch. House is there. Okay. Number two, there is no big signboard that remind you every day how much the value has dropped. Imagine tomorrow after you buy the house 500 ringgit, right? 500,000, right? After you sign S&P, start paying for the first month installment. Tomorrow, someone walked up to the next door and say, "Hey, I think your house only worth 490." Straight away, right? There's a very big signboard that come up in front of your house and say, "Your house is only worth 490 because someone offered 490." Third day later, 1 month later, another person come and just kacau kacau lah, and then the fella say, "Aya, you know what I think your house 450 lah." Then right, the signboard straight away come out in front of your house. Your house is now worth 450. Do you feel extremely kanchong? You just lost. So the same thing with stock. So that is the risk of it. And very often, to put it into conclusion, is this while there are some real risks, just like any investment, but a big part of the risk in investing in stocks come mainly from your own knowledge and your own emotional management. If let's say you don't manage it well, Just like the house, you bought it at 500. Tomorrow you see someone offer 450. Then straight away, third day, you call your agent, say, I want to sell. I scared later drop to zero. Better sell for me. Please sell for me at 400 because I want to sell tomorrow. Make sure that it can go away. You know? Yeah. So these are the kind of risks that often come in for stock investment.
So a lot of like psychology aspect as well, in the sense
Yes.
of psychology aspect as well. So let's answer some of the questions. Yuzumi can check if we can trade in pre-markets, how it works at the company.
Can check even trade in pre-market. I'm not sure what do you mean by pre-market, but I suppose you mean by before the company is listed. If that is what you mean, then you can write there to clarify a little bit. But nonetheless, usually before a company is being listed on the stock market itself, they are called private companies. So you only get to invest in them if, let's say, you are invited to invest in it. Yeah. Only if you are invited to invest in it. Now, nonetheless, these days, you can invest in certain private companies when they actually go for equity crowdfunding. Yeah, those are part of the things that you can invest. So equity crowdfunding is not too far from stock market in itself. You're actually investing in a company. The only difference is that equity crowdfunding, the company can be any company. It doesn't need to have a certain like level of revenue. Yeah, but main market, you need to have a certain amount of revenue. Your company need to be good enough. All right. So I think she clarified, is it? Yeah.
Pre-market means what is this?
Oh, okay. I just saw the YouTube site. Okay. So Yuzumi says, sorry, pre-market means 8:30 to 9 a.m. No, you can't on Bursa Malaysia. You can't. Bursa Malaysia, you can't. But there are certain apps in the market that trades US stock that allow you to trade pre-market and post-market, which means before the market open and after the market close. Yeah. So that's pre and post-market in that sense. Yeah.
So another question for Yuzumi. Any materials to recommend for somebody to know about the whole framework of KLSE markets?
Well, I have to tell you that actually, when it comes to studying about the whole framework of KLSE market, I suppose you mean by learning how to invest in KLSE market. The truth is actually, if you know how to invest in the US stock, then you can invest in KLSE. It's actually the same thing. Framework is about there. Nonetheless, if you need any more resources, you can check out my YouTube channel. You know, I've quite a lot of videos about it. But nonetheless, the truth is there's no structured learning in that sense. Not many offer you like articles that give you a very structured kind of way to enter into the market. There are quite a lot of classes out there nonetheless, but it would be a little bit more costlier. Yeah. So I think formula is the same. If you ask me, at the end of the day, I invest in both US stock and also Malaysia stock. Yeah. How I do it, I go with a fundamental approach. I actually try to understand what the company is doing, what's their product, what's their business model, what makes them so special, what's their economic mode. Then I look at their financial statements as well to make sure that they actually have a strong financial result to support the so-called business model that they believe in or they are working on, right? And they are doing. And then with that, I make a decision of whether should I invest in that company now. Because the final thing after I know that the company is good, the question is the price right now right or not? Is it too expensive or too cheap? Yeah. And when it comes to that part, I personally would use a relative valuation more than I use intrinsic valuation. So when it comes to, a lot of people like to ask, is this price right or not? Is Top Glove too expensive right now? Is Supermax too expensive right now? Or is this front can too expensive right now? This kind of company, they will ask this kind of question, right? And there's two ways to actually calculate whether is it expensive or not. Number one, you use what we call an intrinsic value calculation, which actually you have a set of numbers that you pluck out, like for example, growth rate, for example, market risk, risk factor, beta, stuff like that. Put it all together, then you do a calculation and it will tell you, okay, based on the projection, we think that Franken is worth 3 ringgit and 60 cent, or either 3 ringgit and 90 cent, or either 4 ringgit. Now, when it comes to intrinsic calculation, you have to understand everyone have different assumption. I think Franken will grow 20% next year, but some people will think that Franken will only grow 5%. And another one person say, I think it's going to be 40%. So end of the day, there is no real standard. See? Because you need a real information. And who's going to tell you that information? Only the CEO will know. And do you think the CEO really know? Can't be certain as well, because you're talking about sales projection, right? So you can only get the closest number. And so certain bankers get a better number, certain bankers don't. But nonetheless, as a retail investor like you and me, you probably won't be able to talk to the CEO and ask him, hey, CEO, can you tell me next quarter what's your result? Hey, open your book, show me. You sure or not? Signed already or not? You sure or not? Got or not? Coming in or not? We can't do that, ma. So if you ask me, it's almost a waste of time to go and calculate your own intrinsic value, because you don't have this kind of information. Okay, some people still insist that I should, but in my own opinion is that rubbish in, rubbish out. I'm very sure that I'm going to give rubbish to my my formula. So even in my formula, now good also no use. So I can only know the range. So easiest way, go and read bank reports, because bank will produce the research report and they will tell you their target price. So just go and read. Yeah, read about it, and then they will tell you that I think this company is priced at such. And you will realize that 10 banks, all 10 of the bank give you different number end of the day. All 10 bank give you different number. All 10 bank have different target pricing. So even if bank can do such a different price, what makes you think that you who have no information can be more accurate than them, right? Yeah. So that's my opinion of intrinsic value. But so most of the time, I personally use a relative value. So relative means I do a comparison. For example, if I'm comparing between, put it this way, Wing Hon has an e-commerce store and Mr. Money also have an e-commerce store, right? And Wing Hon's e-commerce store every month can sell 1 million worth of goods. And Mr. Money e-commerce store can sell 500,000 worth of goods. And now Wing Hon say, if you want to buy my share, you can buy 1 unit, 10% of my company at the price, let's say 50% of the company at the price of 1 million ringgit. And then I go to you all and then I say, hey, I also want to sell my company. I want to sell my company 50% for 1 million also. Weng Hon makes 1 million in sales. I make only 500,000 in sale. But I want to sell 1 million for 50%. He want to sell 50% for 1 million also. Who do you think is cheaper? So we can compare. Yeah. So we are making this thing called a relative. So when we look at the different companies in the similar industry, okay, all these different companies in similar industry, and we take an average and we say, hey, I think this company, the price is considered below average or above average right now. So that's what we call relative valuation. Yeah. So that is the method that I tend to use more. Yeah.
So a lot of comparisons, a lot of study, a lot of information research have to be done before you really decide to go to buy any company put your stock.
Yes, that's right. So you really want to make sure that you are equipped with the right knowledge. Yeah.
Let's hi Rosly, how are you? Jeffrey Sons, back to the day I wanted to be an entrepreneur and wanted to make a successful business, but then I have learned I'm not good at managing business as I have full-time job and don't quit. I agree the stock investment is a business. Let the professionals and experts run them while we keeping. Yeah, I mean this is actually very true as well, because if you want to take up a new skill like this one, I mean like stock investment, it will be like yeah, a lot of works to do. So do you agree like if you are a personal trainer, you just get someone that is good to help you, or you go and get a personal trainer certifications and do it your own. You get what I mean?
Yep. Yep.
Yeah. So always like learn from them, or just get someone that is good and then just put money. I mean I have my ex flatmate. He is very into this kind of stock and stuff. And so every single day he just spend his time, looking at graph and stuff like that. Okay. So what I do is that, hey, I have X amount of money. Okay, you just I mean just buy whatever that you think is worth. Yeah, I just give him and then he just spend. Yeah, and of course touch wood now still okay lah. We don't lose money. Yeah, because I mean he is a person like always on the screen only. Look at the graph, look at the chart. I see also pending. It's really pending one. To be very honest, I mean when I look at the chart, he print out a stack of wow, a very ganko work. I mean for me, I think it's very. Yeah, unless you are really interested in learning, then you can go ahead to learn. But if you go in just because of the money, I think it's quite hard lah. Because if your goal is just money, yeah, you won't like study the real business behind stock investment. I mean that's what my yeah lah, my
Yeah.
opinions lah. Yeah.
Yeah. I have to kind of, I mean, kind of agree with that. Is that if let's say for people who, like, they say they want to invest, but they are not too interested in actually studying the stock market itself, right? Uh, then you have two choice. Number one, you invest in what we call ETFs. Yeah. And that one you can use robo advisors like Stashaway. You can use I think for Muslims you can use Wahid, you know. And another option is to use unit trust. So at least there's a fund manager who manages the fund for you. But here's where unit trust again comes down to another part. You need to at least know how to read a fund fact sheet. It's much easier than reading understanding how a stock works. But again, it's about trusting people. So you just need to see the person's track record lah. Basically, you see a person track record very good, then you would say that 90% of the chance the person may repeat that performance. But if the person don't repeat, can you scold the fella? Cannot also lah. Yeah, so that is investing in unit trust. But remember to read the fund fact sheet lah, because out of 10 funds, only 1 to 2 funds are doing good. Not 8 funds are rubbish. Yeah, that's standard. That's standard. Yeah, it's standard in the market. Yeah. So if you're interested to know more about how to pick a good unit trust, you can contact me also, no problem. Yeah. Anyway, but also on the other end is that the good thing about stock investment to a certain extent is maybe once you identify 1 or 2 good company, then you just continuously investing in that 2 companies. Like take it as a FD and just save. That is one way that you can have the maximum growth in that sense, right? So you don't need to be like always looking at all different companies trying to look for new opportunities. Just let's say for example, if you think Nestle is good, then just put in money into Nestle regularly. The market, the price high, price low, don't care, just put. Every time just put. After 20, 30 years, I can almost guarantee you're gonna be making a lot of money also. Yeah. But it's just more boring. So it also works. So you only do the homework once to identify 3 to 4 companies that are really good, stick with it. And then unless there's big news, then very big news that like they are really they go fundamentally wrong already. Yeah, if not, then just stick with it, just relax, just chill. Yeah, probably every 1 to 2 years, look at it a little bit just to make sure that everything is fine. Yeah.
Hi Wei Jian. Hi Blue Sea. Hi Mohammed Hamid. How are you? And I want to ask, what is your opinion on REITs?
All right. So when it comes to REITs, I personally think that REITs is a very good investment for people who actually want to get dividend. Okay. But nonetheless, the next part of the thing is this: REITs, to decide to buy a REIT or not, right? You are actually almost gonna do as much study as you're buying a stock. Okay. So I personally, while people categorize REITs as a different instrument, they categorize stock and REITs like two different things. Now, in my opinion, both of them are on Bursa Malaysia. Both of them, the unit price can change as per demand. When some people think that it's worth RM1.30, they're gonna offer it that. When it goes high, it goes high. It goes low, it goes low. There's no capital guarantee per se. You get what I mean? Yeah, it's yeah, the price can go up and down for the share price. And every year they give you about like 5% dividend, sometimes 3 to about 8%. Yeah. And in my opinion, if I do that much of work to study about a REIT, whether to buy it or not, might as well I study about the stock as well, because there's much more potential gain and the risk is pretty much similar. While the argument is they say REIT has slightly lower risk because it is property. Now, but you have to understand, REITs is actually simply a company that is focusing in the business of managing property. So it's still a business. It's still a business. At the end of the day, if the business is not managed well, you still don't get any return. Now, when COVID is bad right now, when we look at things, right? Are there going to be more and more people renting offices?
No, I don't think so. Yeah.
Right? Yeah, COVID
Work from home.
literally changed the way we work, right? So, what kind of properties do you think or real estate are doing well at this point?
Hospital.
Hospital. What else? Something that has to do with what you're doing.
Or e-commerce? Like
Yeah. So e-commerce. What do you need to for e-commerce?
what do I need
Warehousing.
e-commerce? Or warehouse, yes.
Warehouse, industrial warehouse. These things are growing instead. So if you are thinking about investing in REITs, these are things that you look at. Now, you see, my point I'm trying to say is that try not to look at REITs as a different instrument as stock. Because you see, you're also putting in the same amount of thought and effort. Now, the same thing, I ask myself the same question. When COVID hits, what are the things that will go on? Data storage is more important now because market is moving towards cloud. As we are going to work from home, what do you think your company will need to increase? Cloud storage, true or not? Transfer file ma? Last time I can just pass to you to Panda, but now cannot. I cannot see you. So cloud storage, you need to increase that. Okay. Then what else is going to increase? Food. Food goes on. The one doesn't matter. And what kind of food? Not luxurious food. That's why hospitality don't do that well. But normal food, kawan, those kind of thing, packaged food, those kind of stuff are gonna bound to do well per se. Medical devices, medical equipment like glove. So you see, it's actually the same train of thought. You're actually just learning to think about things in the right way, in a very analytical manner, I would say. Yeah. So almost like if you're an engineer, you just need to think of problem and solving what's the solution to a problem. So apply the same way that you think and apply it to both REITs and the whole market itself. And then with that, you are able to look for a good company to invest in. REITs, in the end, is just a company that manages property. As simple as that. You're still investing in a company. Yeah.
The reason why I bring up this question is because REITs investment is the only and also the first online courses that I took. Yeah, that was
Oh,
in April, I think.
right,
Because the
right.
thing is that, yeah, this so-called gurus, he says REITs is the safest to invest if you are new, and you are not really a high risk taker. Yeah, so I joined his classes, and then then I and then
Yeah.
I just get I mean, I bought a few REITs. I bought Sunway, I bought YTL, and two or three more lah. Yeah,
Right.
yeah, lor.
Right. Yeah, it's
That-
okay. I
that-
also have REITs in my portfolio. One, I do have REITs. Yeah, I used to invest in AR REITs. Yeah,
uh-huh.
I used to invest quite a bit in AR REITs, and I was interested in the one that started H Hectare at one point because of the high dividend. But after a while, I just like, as I study other things. Then like every time, after I study, then I like, oh, I rather put my money into Front Can, or I put my money into MeTech or Top Glove, because the return like higher. But nonetheless, one thing good about REITs is this. Okay, there's actually a benefit in REITs. Is the reason that REITs give dividend. Yeah, REITs has a dividend policy that pays out above 90% of profits, right? So that's the good thing about REITs, right? Uh, yeah, and that is something that for those people who are looking at planning for retirement, as you near the retirement age, I would say that having certain REITs in your portfolio as you go nearer to retirement is actually a pretty good thing lah. Yeah, it's actually a pretty good thing lah. But also look at it in that manner where, like, I mean, if I can find a company that's very good, that can give me about 5% dividend, and I can find a REITs that give me 5% dividend, well, the chances are I'm gonna go for the good company. Yeah, not REITs. But very often REITs give you that 5% dividend. It's almost guaranteed that you can kind of get it already, lor. Yeah, it's almost kind of like there, lor. Yeah. So that's that particular benefit about it that I cannot ignore as well, lah. Yeah, but just don't think of it as a separate thing. Never think of REIT as a separate thing. I mean, you went for a class for REITs, right? You were saying, did it took up
Yes,
more time
yes.
for you to study it?
Do I think what?
Did it took up a lot of your time to study it? Like you need to calculate the NAV.
Yes, a lot of thing. I mean, a lot of calculation have to do.
Yeah. So
It's
it's
crazy.
not,
Yeah,
yeah, it's not so far from proper from stock investment itself lah. Yeah.
and a lot of you have to read the financial reports, this and that. Like, wow, a lot of works have to do.
Yep. Yeah.
So I think just a last question before we finish off. If you guys are still watching it, if you have any question, just feel free to comment on the comment box. Okay. So the last question that I would like to know is that I mean, for our audience as well. So because there are a lot of different type of investment in the market. So I mean, which type of investment that you suggest for a beginner at this COVID pandemic time?
Mm. All right. That's actually a very good question. For beginner investor who want to invest during this pandemic time, I would say it still comes down to your risk appetite. Yeah. But in my own personal opinion, uh, it's still stocks. The reason being is because during this period of time is a golden opportunity to invest in the stock market. Stock market is low, it's down, it's crashed. Put a little bit more effort, you are just exactly in the right period of time to find a good company, invest in it, and grow together. Now, however, if you are not the kind of person who wants to spend time doing all this, I would say your next best option would be actually ETF or unit trust. For those of you who do not have much of a budget, right? If budget is a problem, then just go for ETF. And I would suggest go for Stashaway, right? Because Stashaway has you can start with just 50 ringgit. That's very low. Yeah, starting with just 50 ringgit and not much of fee being deducted and so on. So yeah, I would say that just start with an ETF if that is what you want. Yeah. But if you have a little bit more budget, if you have like about 2,000 ringgit or so, go for go for stock. Go for stock. But that's if you provided like you're really, you're interested in study lah. Yeah. If not, then you have 2,000 ringgit budget, then go for unit trust. Yeah. But again, like I say, you also need to pick out the right unit trust. And I personally, I actually would recommend like probably try to take a look at Affin Absolute Return Malaysian Equity Funds, Kenanga Growth Fund, who's also a Malaysian Equity Fund, or either Kenanga Growth Fund 2, this kind of thing. They are pretty good. Yeah. So you will be able to grow together at least. Yeah. So, yep, these are the types of investment that I would suggest for a beginner at this time. But more importantly, I would actually say during this time, invest in building another income stream. That will be also a very, very good investment. So, yeah, learn from Wing Hon, because I know that you do e-commerce, right? Yeah. So I don't know if you teach classes, yeah, or anything like that.
Yes.
Yeah, go and learn how to build another new income stream because I mean, he didn't pay me say this lah. Yeah, but I'm saying that I really mean it because a lot of people think that you can invest to be rich, but investment only happens when you have the kind of cash flow and when you have money. Yeah. So learn to build a new income stream. I can tell you that up to today, my best investment is not in stock, it's not in properties or whatnot, although those give me pretty good return, right? My best investment is actually in learning how to do business. Yeah. That is actually my best investment because that itself has allowed me to like when I went into debt, when I got no money, when things were tough, I can get out of it because I know how to make money myself. I don't depend on an employer or to pay me, I know how to create my own way of making wealth. Yeah, and I think that is probably the number one priority investment that you need to really, really, really consider lah. Yeah.
The skill of how to make money, right?
Yep.
Is there any management fees for ETF?
Yes. Very low. Very low. I think for Stashaway is 0.8. Yeah. 0.8 for anything below 50,000, if I'm not wrong. Yeah, 0.8%. Yeah. Now, try not to be too caught up by management fee as well. If let's say you have the budget and you have some time to actually study, yeah, I would say that don't or whoever lah who's actually considering investing in like ETF or unit trust, right? Don't get too caught up with management fee because let me ask you a very simple question. If I can give you 3% return a year, but I don't charge you any management fee, okay? And another option is I give you 15% return a year, but I charge you 5% management fee. Which one do you think is a better investment?
What's the 15%?
Yeah, lo. So, end of the day, your concern shouldn't be on management fee, should be on the track record of an investment. Yeah. Always focus on what is the track record of an investment if you invest in it over a long term. Yeah. That is more important. Take that amount, then think to yourself, is it worth paying the management fee or not? If it is worth, then go for it. If it's not worth, then no. Definitely, there are a lot of other factors like, is it a short-term one, is it a long-term one, and so on. But because we don't really have like super long time to explain one particular thing, so just a point to consider. Don't get too caught up by it. Think about what kind of return can you get first. Yeah.
And then before we going off, do you have any like I mean, how are we going to contact you if we have any further questions, or do you provide any services, or you have any website, those kind of things, or just your YouTube channel?
Okay, so you guys can actually watch me on my YouTube channel. We actually have live on every Tuesday, Thursday, and Saturday, which is tomorrow. Yeah, join us tomorrow because tomorrow we have a very interesting story. A guy who started investing at 18 years old as a student, and now he's 23, and he already built for himself a 6-figure stock portfolio. 6-figure. Yeah. I know how big is that 6-figure, but let him reveal it if he wants to. Yeah, and he's still a student. Yeah, and he doesn't have income during that time. He just save up on his allowance. Really inspiring story. So come and join us tomorrow to hear that story. But for those of you who are interested in learning how to pick a stock, we actually are doing a webinar in the end of the month in November. We're actually doing 2 rounds of webinar over 2 weekends, where we teach people how to pick a good stock in just 3 days. Yeah. So yeah, you can go and check it out on our Facebook there. We have our post up there. It is just 209 ringgit for
So
a
Mr.
3-day.
Money as well, your FB page.
Yes, Mr. Money TV is my FB page. Yeah, yeah,
Mr.
I'll
Money
put
TV.
that thing there.
Yeah, Mr. TV. All right. I mean, appreciate that's it for us for today. I mean, thank you so much for coming into this live, because I'm always looking for people like that like yourself, to share some of the financial knowledge to us, and because I know that it is very important to have the skill to earn money. Because I mean, I was working, with a boss before, and then because of this COVID, and then I just lost my job just like that. Yeah, just like that. So it is very important that you know the skill of to earn money, just like what you say just now. Yeah. So before we go on, do you have any questions but do you have anything that you want to tell the audience before we leave?
Thank you very much for Wing Hon for inviting me to your show. I think you're doing a very great job with your YouTube channel, and I think it's really inspiring to see a Chinese guy, doing Malay content, and I think that's really great, because I am actually trying my very best to actually produce Malay content as well. And as we expand, as we hire more people, I'm gonna start talking about Malay content for the Malay community, right? I think that's really, really great. So and thank you very much for actually inviting me. It's really a pleasure, and it's my honor to be here. And for those of you, just the last word before I go, just remember what Wing Hon say. I think the most important thing is this: having the skill of making money. Yeah, you don't want to be caught, cut off just like that, because job security is actually your boss deciding your fate for you. So I'm not asking you to quit your job. I'm just saying that learn another way to make money. Yeah, just in case. And today it's easier than before. Last time you want to do part time, you have to go out and be a waiter, waitress, or be a construction worker or whatnot. But these days you can just sit at home, sit down in front of the computer, learn how to do some e-commerce, learn how to do some digital marketing. It's a very, very important skill, like what Wing Hon has learned, in e-commerce and so on. Even for me, I need to use it, because when we are doing digital marketing our channel and so on, it's a very transferable skill, right? So it can help you grow your income. So spend time, spend some investment to learn how to make money. Yeah, I think that's probably the only advice that I can give, and probably that's the best investment that you can make during this COVID period, because you're gonna work from home. No bosses is gonna chase you. You can sit there and tell a boss you're working on your work, and then you just sit at home and then you learn how to do your own thing first. Yeah, and then complete your work later. So yeah, I think that's the best investment that you can make at this point right now. Yeah.
All right. Thanks, Peter, also known as Mr. Money, and also thank you for all of us to join us tonight. Okay. Thank you so much, and I will see you next week. Bye bye.
All right. Thank you very much.